Yesterday was another rough day for the markets. If you take a look at where the major averages all stand and from their all-time highs, you've got the Dow down by 19%, the S&P down by 24%, the Nasdaq off by 34%. Joining us for more on all of this is J.J. Kinahan. He is chief market strategist at Tastywork. And J.J., we just talked to Jay Clayton, the former head of the SEC, and he said one of the bright spots in all of this is that the market has been down, but it has been very orderly. You actually say that's one of your biggest worries. You want to explain that?
Yeah, sure, Becky. I do think it's a bit of a worry for this reason. If you think about, you guys talk about are we near a bottom? Are we hitting a bottom quite a bit? Traditionally, we don't hit a bottom until people have sort of thrown in the towel, if you will. And we have these big selling days. You think about the sell-off we've had, it has been amazingly orderly. Even days like yesterday, I never felt a sense of panic as we were going down. And so I do think we need some days where we see that sense of panic before we can say we're going to hit a bottom. And so what that means is we can continue to grind for a while. And if you look around right now, you're like, okay, what's the good news that's going to make us really rally? We are, I think, going to continue with some of these day rallies, if you were, maybe 1 or 2 day rallies. But overall, to hit the more traditional bottom, I think we need to see some sense of panic on some of these things.
JJ, you work with retail investors. What are they thinking at this point? Have they had it? Have they stepped away from the market? Is it no fun to watch this anymore and, in fact, just too painful?
Well, I don't think anybody's having fun when, let's face it, retail tends to trade from the long side primarily. And so I don't think people are having fun watching the market go down as much. But I also think the good thing is a lot of retail traders have learned from the 2008s, 2000s world. We have a new generation. I know you've talked about this before, Becky, that never has seen a market that goes down. So there is probably some education going on from that point of view also overall. But that said, the biggest difference I see now from a year or so ago is the Pelotons, the DocuSigns of the world. Our clients are not going out toward those stocks, and trying to catch the falling knife, if you will, even as much as they were a few months ago. The last few weeks has been really interesting to see the pattern of retail because they've gone to those stocks that, many of whom Joe just got done talking about in terms of they have earnings, they're solid businesses, Apple, Microsoft, Coca-Cola, McDonald's. So more traditional names have certainly been the favorites of retail clients. And that speculative, if you will, flair on some of the, okay, this stock has gotten beaten up 80%, so I have to catch the falling knife and say this is the bottom. That mentality has certainly faded quite a bit over the last few weeks.
Yeah, you said that they're getting an education. I guess that's one thing to call it. It is an expensive education that we're all getting at this point. What are signs of hope? If you worry about the fact that it's been orderly to this point, what makes you feel better?
Well, I guess the one thing that makes me feel better is you still see some stocks like Oracle, et cetera, that come out with good earnings. That doesn't make me feel a lot better overall in terms of, hey, are there still some companies that are going to be able to do it all right? Yes, there's always winners and losers in every market overall. And, when I do say education, I don't take it lightly when people are losing money, but I say this. One of the best thing about the market to me is that it humbles you constantly and it makes you have discipline. And so I think with that, people, as they're learning to be longer term investors, because as I said, if you think about people who have never seen a bear market, they're probably younger investors overall. And I think in everything we do in life, when we're younger, we learn some lessons. And there's one lesson to be learned about the market, and that is you have to respect it. You can't just figure you're going to buy and it's going to go up. So from that point of view, I don't think that, sometimes things like that happening to you, nobody ever wants to lose money. But when you're younger, you learn some lessons, be it that you pay in a college or, a trade school. And in this case, many people are paying a bit in the market to learn about the respect you have to have for it and the fact that it does humble you on a pretty regular basis.
Shepard Smith here. Thanks for watching CNBC on YouTube.